We kick it off right here with this top story, and that is replacing NAFTA just in the nick of time. The deal will replace the 24-year-old NAFTA agreement, highlighting new rules on the origin of automobiles, more market access for U.S. dairy farmers, and updated digital trade and intellectual property provisions, among other things. White House National Trade Council Director Peter Navarro outlined the administration's goals for a new NAFTA deal on Sunday Morning Futures with me yesterday.
We want to restore North America as a manufacturing powerhouse by reclaiming the supply chain. There's also a modernization component that brings in things like protection for digital IP, pharma, and things like that.
And markets are reacting. Joining us now to talk more about that is Mahoney Asset Management CEO Ken Mahoney. Ken, great to see you. Thanks so much for joining us.
Great to be here.
Your reaction to this deal and obviously a reaction on markets this morning.
Well, the market's saying we like this. I mean, this is something that the president's really good at, deal making. And he really pinned it pretty good. He got together with Mexico. Next thing, Canada's on the outside looking in, and great leverage. And look, we saw what happened in China. China's market's kind of down 20% since this whole thing started. They need us more than we need them. And the same thing is true with U.S. and Canada. So
are there areas within markets that you think are impacted more so than others, or is this, do you think, broad-based indication to buy stocks?
Well, I think it's broad-based. The Dow's up 200 points.
Yeah.
I mean, it does protect automakers a little bit. The dairy farmers are going to like this news. But I think it's general, but also shows, I think we're already extrapolating this morning that if we can make a deal with Canada the way we did, that we should be able to make a deal with China after the midterm election. And that's kind of, I think, what the market's kind of sniffing out here this morning as well.
Some of the emerging markets that are out there were potentially an alternative for manufacturing if deals couldn't get made. Do you think this sort of accelerates the sell-off in emerging markets at all? Because a lot of the hope was that that's the future frontier for manufacturing stuff if we can't do it in China or in Mexico.
Yeah, I mean, look, the emerging markets have been all bit about the dollar. The dollar continues to get stronger, though last night we did see the Canadian dollar get a little bit stronger against the U.S. dollar, so that's a plus. But I do continue to see the U.S. dollar getting stronger in those emerging markets. It's very difficult with a strong U.S. dollar for them to perform well.
It remains to be seen, though, too, what happens after this. We get this deal. Potentially, it would go up for a vote in front of Congress sometime next year, maybe. So you would have to
post-midterm,
right? Post-midterm elections,
or maybe a lame duck session, or something.
But again, there are enough provisions in this deal to make the left happy, quite frankly.
Absolutely.
It gives a real lift to the unions, particularly the auto unions, across all three of these countries. And you have some words from left-leaning organizations and individuals who are anti-globalization. So there's a lot to like in this deal. Maybe a lot to dislike, but enough to get everybody on board.
I think so. I think trade is probably the most bipartisan thing we could speak about from the left, from the right. In fact, actually, look what's happened here all these years. You know, the president said he's going to do this, and they didn't like the deals. He got under the hood. He's fixing these things, and this is, you know, between Democratic administrations, Republican administrations. You know, trade comes really for both parties.
You know, a lot of the mainstream media and a lot on the left have been really saying that all of these trade problems are going to really sour all of our relationships with Canada, with Mexico, that there was no way that we're going to have good relationships anymore, that everything, you know, the whole world was going to end, the markets were going to go down. Do you think those concerns can come down now that these deals are made, or are they still going to perpetuate?
They'll always be out there. And, you know, look, if you trade the headlines and these serial bears out there keep growling at every headline about the president, about Mueller, about trade, and guess what? It doesn't work, right? Because underneath it, we have strong corporate earnings, we have lower tax rates. The market's telling us something that these bears that keep growling louder and louder just don't get. They don't get that part.
Well,
you know.
But they're talking down the U.S. economy. They're talking down the health of Americans, quite frankly, and I think that could potentially backfire for them in the midterm elections, because they're, again, consumer confidence is at an 18-year high, and they literally will find one or two small details in the economic data that come out that don't look good for the president. And quite frankly, these are hysterical people who are in the business of ranting and raving and getting paid for it, and they would prefer that we genuflect to all of these foreign leaders and kiss their rings. And that's not who President Trump is, and that's not who America is.
Meanwhile, here we are at the beginning of the fourth quarter. We're about to get third quarter earnings out. We're expected to see growth in profits of 22% year over year for the third quarter. Your thoughts on what the quarterly quarterly numbers coming out in the next couple of weeks going to do to markets? Is that all priced in, or
no? I don't think so. I think we still have the tale of two markets. Thank you, Charles Dickens, because you still have the growth leaders, the large cap growth. I think are going to continue to outperform those value stocks. Though you find those new lows like Ford, like some of the home builders. You find GE. I think they're still going to be kind of dead money, but I do think the money's still going to go, though it's a crowded trade, into these large cap growth that continue to beat their numbers.
So you want to buy stocks going into the third quarter reporting season?
Sure.
Let's talk Tesla for a second, because more turmoil there. Obviously, Elon Musk stepping down as the chairman of the board of Tesla's board of directors following the SEC lawsuit, but he remains CEO. He wants to keep his board seat as well. Many anticipating the shift in leadership will help solve production problems that have long vexed investors. Tesla is up in the pre-market. Ken, what would you do with this stock here?
I would sell it. Look, I mean, basically, if you remember Back to the Future, the character named Doc, that's who we have for Elon Musk here. I mean, he's brilliant, but he doesn't have any common sense. I mean, honestly,
just not a DeLorean.
Yeah, had a DeLorean. That was great coming out of that. But think about it, though. I mean, really, disseminate information before market hours. What happened to that? Or during the close? I mean, obviously, he doesn't like the shorts. He doesn't like to be talked bad about. To do in the middle of trading day, I'm sorry, but this is a slap on the wrist, I feel.
Yeah, but would you have sold it on Friday when it was down double digits on Friday, when it looked like they were going to fight these charges? Again, because the SEC was in a pickle in terms of they needed to settle with him as much as he needed to settle with the regulators. Because what was the SEC going to do? Essentially put this company out of business, barring him from becoming the CEO? That was just absolutely absurd. When they're fixated on one individual rather than the scores and scores of shareholders who have put their money behind Elon Musk, they were going to destroy market value for them. Again, classic SEC, can't see the forest for the trees.
Yeah, look, I mean, we're not long or short, so we really can be kind of in the middle on Tesla, but there's other fundamentals that are kind of creeping up too, right? There's a lot of debt. There's other competition that's coming in. I know, look, if you own a Tesla car, you love it, and that's a really good thing. However, at the end of the day, you really do have a crazy CEO who, like I said, that makes no sense. I mean, everybody talks about funding secured, which wasn't secured, obviously, and there's no term sheet for that. But they go a step further. Why wasn't this information after the close? Why wasn't it before the open? You're talking about bringing the company private. I mean, it really sets a bad precedent going forward to other CEOs who start taking major announcements in the middle of trading day on Twitter.
But again, it doesn't. It sends a message to all these other CEOs that they can't behave that way. I know people in the technology industry, executives, they've been having meetings about, again, it's put a focus on how do you communicate with shareholders, what can you get away with. And I don't think he's crazy. I think that his behavior, that he has never been reined in by anybody, and his behavior is a lot different. I don't like the guy. He's a jerk. He's behaved like a jerk in front of me, but I think that people have gone to extremes in criticizing Elon Musk.
Well, he doesn't like dealing with the shorts, but unfortunately, this is a reality for a public.
Hey, you're in a public market.
Company.
You go to public market to get financing. This goes along the territory. You get criticized.
No, I've been highly critical of the guy, but I think that this is classic. Regulators were going overboard, but the headline was wrong over the weekend. All of these people on Twitter and writing articles that he's been removed as chairman. No. It is the fact that he's staying on as the CEO, and this is a concern that's been wiped away.
Yeah, that's true. Well, all right, Ken, great to see you.
Good to see you also.
Thanks so much for weighing in on all this.